Might have been going to have a little bit of a pullback, as Michael rightly pointed out. It didn't happen though, even though we didn't have a lead from Wall Street, with US markets closed overnight for President's Day. And yet another day of strong trading volume, around $6 billion. That's got to be encouraging, hasn't it?
It's absolutely incredible. Yesterday we saw more than $8 billion worth of stock being traded. Today we saw almost $6 billion worth of stock being traded. And this is on a day where the US stock market is closed because of the President's Day holiday. And really what this indicates is that institutional money is coming off the sidelines. Now this is important. We've talked a number of times about the fear of missing out, and the fear of missing out trade is not so much for retail investors, it's more for institutional investors, especially fund managers, because as a fund manager you don't lose your job, you don't see funds flowing out unless you're really underperforming the market. If you just get market performance, usually that's a pretty safe bet, but if you're trailing the market performance, well, you're in a bit of trouble. And this year's been a fantastic one for the Australian share market. If you haven't been in the share market, then you're going to be trailing. Year to date so far, the Australian market's up by 9.1%. And if we have a look at particular sectors, the financial sector, the consumer discretionary sectors, these have been outperformers, up by a massive 13.5% in a little over a month. On the flip side though, some of those traditionally defensive areas like the utilities, the property, the healthcare space, they've underperformed. We've only seen growth there of 2 to 4%, but it's still been a positive performance. In fact, every single sector has been trading higher this year so far. Today it was another fantastic day, and more signs that it's institutional money which is really driving this market. We saw the large caps doing extremely well today, the market up by 0.4%. But if you have a look at the mid cap and the small cap space, we actually saw both of these indices in the red. We have a look at the mid cap index, that was down by about 0.2%, and the small cap index was down by 0.1%. So outside of those large caps, we are still seeing a little bit of weakness in the market. So this is really being driven by some big investors. This is shown in the types of stocks which are running hard, and also the types of volume that we're seeing on what's typically quite some slow days on the Australian share market when the US market is closed. Also, tomorrow is going to be a big day, and we did see a little bit of positioning ahead of that. Tomorrow is really going to be the mining day, and I guess we see big names like BHP, Fortescue and Woodside Petroleum are reporting tomorrow. Woodside Petroleum was up by 1.7% ahead of its results tomorrow. We also saw BHP doing well ahead of its result. It was up by about 1%, and it's an important time for BHP. Just very quickly having a look at the 2-year chart for BHP Billiton, you can see where the shares are now, and we're really testing an 18-month high for the stock. So these results tomorrow are going to be essential for breaking that key resistance mark for BHP Billiton, and also key for the market, being the biggest stock on our market. And Fortescue doing well ahead of its results tomorrow, up by 1%. So altogether a fantastic day for the Australian share market. Once again, we're in our 6th consecutive week of gains, and really that bull run continuing.
On the back of a bit of a mixed bag of earnings reports, perhaps you could go through some of the winners and losers for us.
I guess we've seen some big moves, and really on the back of earnings. If we have a look at Southern Cross Media, that was a star performer. In fact, we're seeing this stock up 30% in the year to date so far, so just over the last 6 weeks. So that's a fantastic performance, and really some of the commentary coming through has been positive, that there's been an improvement in terms of the ad markets. Also, if we have a look at the underlying profit results, we've seen that beat. Asiana also coming in ahead of expectations. In fact, there's been a raft of numbers. I guess on the downside though, Monadelphous pulling back after its results, so that was a little bit of a disappointment. But altogether, once again, some big moves, and the trend does seem to be more towards outperformance by stocks coming out with earnings and underperformance. So I guess some investors in the market really betting before earnings results now, and we've seen that with some strong performances from BHP, Fortescue as well as Woodside, which report their earnings tomorrow.
A company that didn't come out with earnings today but will on Thursday, APN News and Media, very much in the spotlight after we heard about the CEO and chairman tendering their resignation late yesterday. And just this afternoon now, we've heard Peter Cosgrove, the director with Independent News and Media, has now been appointed chairman of the company. Not a great time for the company to be reporting earnings on Thursday with this kind of I guess, board reshuffle going on. What do you think is going to happen next? Could we see a fire sale, as there seem to be concerns out there about?
Well, a huge problem for APN Media is the amount of debt that it has. So you're either looking at a possible capital raising, which of course has been a problem, and the shareholders have been concerned around that, or possible asset sales to try and alleviate some of that debt concerns. And a large amount of debt coupled up with a business which is struggling is not a good combination. So a lot of disgruntled shareholders. It looks like the CEO has now disappeared, so a new head of the ship. And really the only reason why you'd be investing in a stock like this is because you're hoping for a turnaround. So with new leadership at the top, you'd be hoping for a strategy. It looks like conditions in that media space are starting to ease, and a lot of those media stocks have been performing very well in 2013 so far. I mean, you only have to look at Seven West Media, which is up by around about 40% in the year to date so far. But of course, APN Media, with troubles at the top level, hasn't been participating in this rally. We'll be watching that half-year results very closely this week, and more we'll be watching the commentary around its strategy and how it's going to manage that debt burden.